Welcome to the future of money. Come with us on this journey into the world of Bitcoin, blockchain and crypto projects. You're going to meet the trailblazers. These people have changed my life and they may very well do the same for you. Welcome back, Hard Forkers. We're here with Mark Lamb, an absolute Bitcoin OG. I believe you actually set up the first Bitcoin exchange in the UK, Mark, so we're very eager to hear more about what you're doing currently with CoinFLEX.
Yeah, absolutely. So CoinFLEX is a derivatives exchange, and we see the world as passive capital, which is majority of individuals in the world, and active capital. And we've created a number of products that basically allow for passive capital, you and me, everyone, to participate directly in derivatives markets and take advantage of some of the crazy high yields that are being created through both the volatility of derivatives and just the leverage in derivatives and all sorts of things without having to understand derivatives. So we're trying to create very simple and easy to use products that allow people to take advantage of this crypto market, including without having to spend much effort or spend much time managing what they're doing and just make money from it.
So, Mark, I got some CoinFLEX a couple of months ago, and I'm very happy that the value of it's doubled. Can you tell us, what affects the value of it? How does it move up and down? What sort of turnover are you guys seeing at the moment? Give us some numbers.
So the Flexcoin is our native token, and Flexcoin is absolutely, it's very similar to BNB. It works basically like this. So if you pay fees on the CoinFLEX platform, you're incentivized to pay them with Flex. Basically, you pay half the rate if you pay with Flex than if you didn't pay with Flex. That creates daily velocity because traders trading on the exchange, traders trading the derivatives contracts have to buy Flex every day if they want to optimize their trading. And then CoinFLEX is actually taking 10% of our revenue and 10% of our profits and burning that. We're about to launch this along with the DAO. And then we're also taking 10% of our revenue and 10% of our profits and paying it to DAO stakers. So DAO stakers, basically, the DAO refers to a decentralized autonomous organization, and it's a term that has many definitions in crypto. But right now it's kind of referring to something that allows you to stake assets and get kind of long-term benefits from those assets. What we're about to go live with is basically the first exchange token DAO. And so on Binance Coin, on any other exchange coin, most of the economics are around a burn component and maybe a trading fee component. And some exchanges only have the burn, and some exchanges focus more on the trading fee. We've got both of those components, but we also are creating this DAO component, which I think is a really innovative concept from the DeFi landscape, that basically allows for holders of an asset to get yield. So you stake your Flex coin for anywhere from 2 weeks to 4 years, and you can get a yield in this asset. And it's kind of like if you were not thinking about selling Flex for 6 months, might as well stake it because you'll end up with more Flex than you have when you put it in. But the other thing that it does is it allows the market, so non-stakers, it allows anyone holding Flex, whether you're staking or not, to get a sense of how long-term the Flex holding community is. And so this is something I think that would be very valuable in markets. Markets are at the end of the day a function of supply and demand, and there's a valuation, there's a price that creates a valuation for a specific token, but oftentimes that price is missing information, and so the market sometimes misprices things by those things not having enough information about how long-term some of the asset holders are, and maybe how uninterested in selling some of the asset holders are. And so I think one of the valuable things that a DAO enables and creates is it enables for people that are looking at potentially buying Flex to have certainty over what percentage of the market cap is committed to not selling, and is so committed that they're willing to lock it up and, smart contractually remove their ability to sell. and so that type of lockup creates a very, very interesting holder base, and it gives people more of an interest in the exchange's success, because at the end of the day, Flex, BNB, all these things are like variable rate gift cards. You know, if you have a Starbucks gift card and it's worth $20, you're sort of kind of interested in Starbucks because at some point you want to spend that $20 and get that value. But if all of a sudden you have a Starbucks gift card and its value goes up and down based on, you know, the number of people that want to buy things at Starbucks, that becomes way more interesting. Then you're very incentivized. And if all of a sudden you've locked that thing for 6 months, for example, then it becomes something really interesting where now you're locked in to being a community member, almost being a vested participant, and being someone with a financial interest in the underlying token, the underlying value growing. And so I think Flex is interesting because there's a limited amount of supply. There will only ever be 100 million. There's a burn function. So over time, that supply will go down. There's a constant need to buy it. So on days where no one's actively selling it, there's, you know, traders just have to buy it. And so that creates a bid. And then this staking dynamic is going to be very useful, I think, to the market of existing Flex holders and potential Flex buyers, and even existing Flex holders might buy more, because they'll get a sense of, oh, actually 20% of the market cap is not going to sell for 3 years. You know, 10% is not going to sell for the next 6 months. You know,
get it out, Flex Hex.
Yeah, sure. I mean, Hex is a bit of a weird coin, but you can't argue with those price returns.
Yeah, we had Richard on the channel a while back, actually. Geez, I think it's actually been one of my best performing coins. Crazy stuff.
He's a fellow OG. I mean, a lot of people have said that coin.
I like Richard. Yeah, as you say, he's an OG. I mean, look, you're a straight up OG. I mean, maybe give us tell us a bit about your background when you got in the space and what you've been doing.
Yeah, absolutely. So I got in 2012. And the price was about it was $8 when I first bought BTC, and basically I got in. I was doing a virtual currency startup at the time, and the startup was around loyalty points for small to medium enterprises, and so I was running that company, and I was trying to create a product for that and build a market, and talking to a lot of SMEs in London, in the UK. And basically, I was learning a lot about alternative currencies. So I actually learned about the Brixton pound, which was a UK alternative currency in Brixton. I actually learned about the concept of Ripple. That Ripple, the coin, had not been invented yet, but the concept of Ripple that was predated Bitcoin, and a number of different things. And so I kind of learned about a lot of these concepts, and then I found Bitcoin, and I was like, oh, well, this is exactly what the world needs, and had been studying monetary theory. And so I found out about it, did some sort of math in terms of if Bitcoin takes over the monetary universe, it should be worth around $4 million. And then you can do the simple valuation framework, which is, you know, straightforward, simple, you know, anyone can understand it. If Bitcoin reaches its goal, it's worth 4 million. What % chance do you assign it of reaching that goal? So you could say 1%, 10%, 20%. And then you just multiply the two together. If you think it's 10%, then it's worth 300K. And if it's, you know, if you can buy it on the market for less than 300K and hold it until it reaches that sort of fully priced in price, then you should. And so I did that math, and it was like blindingly obvious to buy it. It became more obvious, I think, when I started talking to people that were using it for commerce, that were using it in different sort of underground communities and stuff. And then I started getting involved in trading it. And so once I filled up and gotten enough of it, and went all in. I basically started trading it in the UK, and I became sort of 20% of the UK Bitcoin market as just OTC trader, just buying and selling it, providing a service, providing a spread, creating profits for myself, but at the end of the day, trying to do as much volume as possible. And quickly, obviously, this was something that was lucrative, but at the end of the day, it was like, okay, we need an exchange. There should be an exchange in the UK. This is very logical. It's a big financial center. Why shouldn't London dominate the global crypto space? And so I created CoinFLEX. That became a large UK exchange. It became the biggest UK Bitcoin exchange. And then I realized that derivatives were going to be where it's at, and the derivatives industry this was 2017, 2018, and started getting into derivatives, and basically moved out to Hong Kong to spin out part of CoinFLEX into CoinFLEX with my business partner Sudu.
Okay. Amazing story, Mark. You're without a doubt one of the OGs. On that note, you've obviously been through, the hard fork back in 2017. Your project is working closely with Smart BCH. So, could you just explain to people? Is this a Bitcoin Cash project? What's the relationship? Talk us through that.
Yeah, absolutely. So I love BCH. I think there were two forks that came out of that 2017 fork, BTC. One fork of Bitcoin, BTC, and the other fork of Bitcoin, BCH. The fork that I prefer more is BCH. I still hold lots of both, but I definitely hold more dollars worth of BCH than I do Bitcoin by a pretty substantial margin. And the reason is simple. I've had a transaction where I paid $100,000 in fees on the Bitcoin network for a single transaction, and it was a CoinFLEX related transaction. It was moving $70 million. But I think any financial network that occasionally costs $100,000 to send some amount of value, the amount of value doesn't matter. I think if you're sending $70 million to the banking system through any other system, it'll be less than 6 figures in fees. And this is something that is not going away. So the Bitcoin has a fixed capacity limit of 7 transactions per second. And I think for a global monetary network, again, I view Bitcoin, both versions of it, BCH, BTC, as just a probability of reaching monetary, reaching the whole global money supply, surpassing the dollar and becoming the world's dominant currencies. And I think Bitcoin Cash has a much higher percentage chance of getting to that status simply because it's scalable. There's no limit, and it's completely scalable to the entire world. When you think about networks like Visa and MasterCard, they can process thousands of transactions per second, and Bitcoin can process 7 per second. And so this is something that's unlikely to, this is a fixed limit. It's not changing. And it's a problem, when you want to limit things, you want to limit things like the number of coins in the universe that will ever exist. I am very confident on any version of Bitcoin, there will only ever be 21 million. But the BCH, version of Bitcoin, I think is significantly more interesting to use and to invest in as an investor than the BTC version, simply because it scales. It actually works for the whole world. So there's no limit. The fees are very low as a result of the fact that there's no limit. It's like sub 1 cent fees. And we just love, as an exchange, you're sending lots of transactions around and withdrawals and deposits and internal reconciliations. And so as an exchange user at CoinFLEX, as a someone managing that wallet infrastructure, I was always looking at blockchain networks and their throughput and their uptimes, and just as a co-founder and manager of an exchange, you're always thinking about these things. And so It was just very logical. I think the world won't realize this for a while, or hasn't realized this for the last few years, because most people don't actually send the coins on the networks themselves. So if you're holding BTC in a Coinbase account and just buying and selling, you don't pay these exorbitant network fees that users of the actual blockchains you pay. But if you're using the blockchains for commerce or for settlement or for any type of trading, if you're a hedge fund, if you're a crypto firm, if you're an exchange, you use them all the time. You're using the blockchain every day, and you're a power user. And I think in the future, the whole world will be power users of the blockchain, because this is just how all commerce is going to be done. And if you think about how these decentralized networks empower people that are cut off from financial services, people that are unbanked, people that are in facing capital controls, all these things are inhibited by centralized systems and benefit from decentralization. And so I think that's where BCH is more decentralized and has a lower fee than Bitcoin. But at the end of the day, is CoinFLEX a BCH company? Is CoinFLEX a BCH only project? No, we support trading of Bitcoin, ETH, BCH, and 30 different other coins. And we're looking to add, more and more and more. We will eventually have, hundreds of coins that we list.
You've got about a billion in trading volume at the moment, which you've literally raced up to in a very short period of time. I think just a few months. How does that break down? What cryptos are primarily trading at the moment? And talk us through that.
Yeah, so the biggest three are BCH, Ethereum, and Ripple. So those are probably the biggest three coins. Ethereum, I think, recently surpassed Bitcoin oftentimes globally in trade volume. And so we're seeing a lot of Ethereum volume on the CoinFLEX exchange. And a lot of our volume is coming from this AMM product we launched. So we really believe that passive capital is just a way bigger market than active capital. And what I mean by that is the market of pension fund, index funds, retail investors that just deploy their money into some sort of money market or index fund or S&P 500 and just sit on it. That market is enormous. And the market of day traders, hedge funds, proprietary trading firms, that is, at the end of the day, from a capital management perspective, a much smaller market. And the passive capital really want yield. And there's so many forms of yield in a crypto derivatives exchange. So just one example is Flex USD, which earns interest every 8 hours just from holding it. But the other example is the AMM, and the AMM basically captures volatility. So I'll give you a scenario. Let's say Ethereum has started the day at 3,300, has dipped down to 3,000, and then gone up. 3,300. It's dipped down to 3,000 and then gone back up to 3,500, and then ends the day at 3,300 again, right? So in that scenario, there could be two users. One is a holder, and that holder will be basically in the same place he was at the beginning of the day. And then the other scenario is an AMM user, and on Uniswap, this might be someone who's a mixture of USDC and Ethereum. And that user will be much better off because they'll have bought the dip all the way down to 3,000, sold it at 3,500, sold it all the way up to 3,500, and they'll be just in the same position from an asset distribution perspective, but with more of both coins. Now, the CoinFLEX AMM user can be even better off because most people, Uniswap sort of requires you to be 50-50 USDC and whatever asset it is. Let's say it's Ethereum. So if you're AMMing or providing liquidity on Uniswap, you have to be 50-50. On CoinFLEX, you can stake only one out. You can do single-sided staking. So you can stake only dollars if you're a dollar-denominated person. And then you might have bought the dip down to 3,000 and then sold out of it at 3,300. And then you've made some yield on your dollars. You can also be only ETH funded, or even you can use BTC to AMM ETH. And what this means is you can actually use your crypto collateral, which a lot of people are very, very significantly deployed into crypto, And you can use that collateral to trade these futures contracts. And because they're futures contracts, we can margin them in anything. And so we do, we allow for cross margining. And that then means you can then effectively get the benefits of being able to use your ETH to buy more ETH contracts. And you can do this with very low leverage. So you can do this with 1x leverage, where you'll only get liquidated if it drops 90%. And what this means, and the yields on doing this, I think yesterday they were around 140% APR for those that had deployed their Ethereum into the AMM. And BCH was very high APR as well. XRP, BNB, we've had times where BNB has had 100% APR days as well. I think there's not as many assets deployed into that right now. We have had some periods where Axie's had loads of capital deployed into it as well. So the other thing is it's very liquid. We've grown and grown and grown net assets wise into this AMM. It's now $100 million in the AMM, but you can instantly redeem. So you can provide liquidity, instantly redeem, redeploy, take your assets off, put your assets back in. So it's a highly liquid way to provide liquidity in crypto and earn yield on your crypto coins. Because at the end of the day, let's say you think Ethereum's going to go to 10K, or Bitcoin's going to go to 100K, or BCH is going to go to 100K. If you have this view, that's great. But if it's range bound for the next 3 months, then you're kind of sitting on your hands holding this coin, which has loads of volatility. And you could capture all of that volatility, buying the lows, selling out of them, buying the lows, again, selling out of them. And then if it takes 18 months to get to, your ideal price target, you're making a bunch of yield in the interim. And I think as crypto matures, a lot of assets actually have participation in terms of liquidity from the Fed. So they have the Fed buying bonds that buy assets that effectively, it might be 5 layers of intermediation, but effectively the Fed has ended up providing liquidity in those assets. And I think one of the powerful things about crypto is, the Fed doesn't directly provide liquidity, and even indirectly, it probably doesn't provide lots of liquidity into crypto markets directly. I mean, BTC USD, BCH USD, ETH USD, these markets directly. And so there's this huge gap where, because a lot of traditional banks and central banks aren't providing this liquidity and aren't kind of buffering these huge volatile moves, you get to do that. And you get to take that opportunity and capture this edge, capture this volatility that's being created. And so that's why these people are making such high returns, because they're just saying, well, if the Fed, if the central banks, if the banks aren't going to do this and provide their balance sheet into this, I can. Why not?
Okay.
And you also get the ability, at the end of the day, market making is something that a lot of the smartest people in finance, hedge fund, engineers, physicists go into prop trading firms, and really, really smart folks, and they're making 100% annualized, but at the end of the day, it's with a small amount of people's money, and it's mostly a private business, and there's no real way for the general public to invest in it. And so that's why what we're doing, our goal here is to enable everyone to be a market maker and have control of their own money and have control over the way they trade.
So the people you're really trying to attract to your platform at the moment, and I'll tell you about my experience in a moment, who are they? What platforms are they currently using, and why should they use yours?
Well, I think in some cases, in sort of the first case, they're probably people that are using DeFi staking platforms. But I think beyond that, it's anyone with dollars or crypto that wants to earn a yield on it, and that is either not earning a yield on it right now, or is not happy with the yield they're earning, etc.
Okay. Yeah. So as I say, the Flex coin, which I have some of, has done extremely well. Now that's purely based on the volume that CoinFLEX as a platform is attracting. That's what's moving that price up for me. Is that's the case?
Yeah, absolutely. So the more volume that the platform attracts, the more the price goes up, basically. So I mean, this is a general statement. Obviously, it's not financial advice, and it's it's not always going to be true, or there might be days where there's a big seller that comes into the market, and the buyers relating to trading volume are not as big. But generally speaking,
what are you projecting in the next 6 months, Mark? I mean, you've done huge volumes in the last 2 months.
Well,
I mean, you did the disclaimer already, not financial advice, people. But we're just throwing some numbers around here. What are you expecting?
I don't have any predictions in terms of the price. What I do see happening is that basically flex coins are moving from sort of weak hands to strong hands, and so sort of you see like flex coin moving from the hands of people that have bought at earlier prices into the hands of people that are really committed and interested in holding it for a much longer period of time. And that's because they're making money from it on the AMM. So these AMM users are soaking up Flex every day that trading firms, traders, day traders, hedge funds, prop trading firms are buying. And they have to buy it because that's how they optimize their fees. And so I think the biggest thing that will be a determiner of the growth of Flex as an asset is really going to be the AMM size, the AMM assets that are deployed. I think also Flex USD is going to be a big determiner as well. We've seen Flex USD, last week Flex USD hit an all-time high market cap wise, supply wise of 100 million. And this week it's hit $274 million. So we spent 9 months getting to 100 million, and then we spent 1 week getting to 274 million. So I think that is going to be a pretty powerful growth machine for the whole CoinFLEX business as well. And it's better than Tether, better than USDC. Flex USD pays interest. Tether, USDC, all the other stablecoins in the world don't pay interest. So what that means is, people say, oh, you can take your Tether and you can lend it somewhere else. Yeah, sure, and that's great, but that's not what we're talking about here. There's no base rate for Tether or USDC. There is no rate that you just get native to holding the token itself. And Tether and USDC are both lending out your money. They're lending it into traditional financial markets, commercial paper and other lending instruments, treasuries, bonds, etc. And CoinFLEX is lending into crypto markets. So we're keeping it all crypto native. It's all over collateralized. So we never do any, it's all public. So it's all the information about all the repo trades that FlexUSD does is public. And it's all over collateralized. We never do any lending where the funds that are lent out are not in our control. And so this is pretty powerful. This is a very powerful thing about FlexUSD is that at the end of the day, it's a safer form of lending. It's all over collateralized lending, and it's within crypto, and it's much higher rate. And we pay 90% of those rates out to the users. So unlike, with USDC and with Tether, they pay 0%. They keep all the interest that they make from lending out your money for themselves. FlexUSD actually pays it out to users. And I think that's a really powerful thing.
So where would somebody hold that asset?
Yeah, so right now you can hold it on CoinFLEX. You can hold it on any ETH compatible wallet. So any wallet that does ERC20 tokens. And you can also hold it on any Bitcoin Cash SLP wallet. And also you can definitely hold it on Metamask on either the Ethereum network or the Smart BCH network. And hopefully more networks over time as well. We
and
would
can
like
I
to
accrue interest into my Metamask?
Exactly.
Wow, okay.
Yeah. So, and this is really interesting.
That's
for
appealing.
DeFi. Exactly. So this is really appealing for DeFi because let's say you're staking or you're providing liquidity in a DeFi app. And so you've got FlexUSD in a pool. Well, that pool might have a X% interest rate or APR. Maybe it's 5, maybe it's 20. Let's say it's 20. Well, now all of a sudden that pool has 20 plus the FlexUSD rate. % APR. So any DeFi app that wants to just juice their returns to users can just add Flex USD as the base currency for trading and lending and borrowing and all types of commerce, and they'll make more money for their users. Their users will just end up having a higher return. They don't have to think about it. They don't have to think about what's going on at CoinFLEX to generate this. How do I stake to get? No, you don't have to stake to get Flex USD interest. You just get it every 8 hours to your address.
Do you want to bring up the platform there? I know you guys have updated the website. Give us a look and show us how it works.
I'll just pull up the platform here. So this is our interface for minting and redeeming Flex USD. This is the CoinFLEX platform. So I'm logged into a demo account here. And in order to mint, it's very simple. In order to mint Flex USD, first deposit USDC, so USD coin, and then you simply just enter in the amount you want to mint, and then hit confirm, and then there you go. You've got your Flex USD, and so and you can see the next interest payment will be in 7 hours. So the interest payments are every 8 hours. We just looks like we just missed a payment.
And that's currently paying 26%. Wow.
Yeah, it's wild. And so I'll explain this 26% as well. So part of what it is there's a lot of lending platforms in crypto where you can lend your stable coins. And what most of those platforms actually do is they take those stable coins and they deploy them into the futures markets somehow. So they deploy them into these trades where you're effectively buying spot and selling futures contracts of some sort, a perpetual future or a longer dated future. But that's how they're generating the 8 to 10% yield that they pay to their clients. But actually, it's not 8 to 10%. Sometimes it's much higher than that. Sometimes it's 20, sometimes it's 50, sometimes it's 60 or higher. And so what we're doing is we're creating a product where instead of these types of lending platforms taking the high rate that they collect and paying out 8 to 10 and magically assuming that it's going to be 8 to 10, we're actually saying, look, we're going to give you the market rate. And if that market rate is 26%, we're going to take our 10% cut and give you the rest. And the rest right now is 26%. So at times where these rates go up, you're going to benefit from that. And at times where they really spike for a long period of time, you're going to benefit from that. And if you ever say, oh, the rates are not as interesting to me, or I need to cash out this Flex USD to pay some bills or buy a house, you can simply redeem. And so you redeem and you get it at the next 8 hourly cycle. And hey, if you want an instant redemption rather than waiting up to 8 hours, you can just pay the fee right now looks like it's 0.02%. So it's a very, very small fee, and you can get it immediately, or you can pay no fee and get it in 8 hours. And so I've just minted some Flex USD and redeemed some Flex USD. And yeah, it's a really, really simple process.
Okay.
And,
so that's quite an easy one to understand
for.
That's a really easy one for the audience to understand. So I can basically mint your stable coin, converting from USD. I can then move that into my own Metamask, hold it there,
Yep.
and receive interest on it. Now, I think the last video I did on what you guys have put together here, there was a little confusion around the Flex coin and this Flex USD, which is your stable coin. So I just wanted to try and clear that up for people now. I would sort of say like the Flex token, which I also have some of, it's done very well in price appreciation. That's almost like me buying the BNB token, because I think a lot of people are going to use Binance and that coin's going to go up. That's sort of the way I viewed it, and that has been the case so far. So could you just explain the difference between the two?
Yeah, absolutely. So Flex coin is sort of the token that has basically ties to the exchange's fees and volumes. So again, Flex coin is basically the coin that traders use to pay fees on the platform with. So if you are paying fees, if you're spending on the platform, you are paying in Flex. If you don't pay in Flex, you're paying at 2 to 3 times the rate. And as a result, most of the traders, obviously money-oriented, pay in Flex coin for their whole entire fees. And so that creates velocity, buying pressure in the token, but also we burn 10% of profits and 10% of revenues in Flex. And separate to that, on top of that, we're about to launch a DAO, Flex DAO, and this will be the first ever exchange DAO. It'll be the first way you can stake an exchange token on the blockchain for this revenue and profit payouts that we're going to be doing. 10% of revenue, 10% of profits paid to the DAO as an incentive to stake Flex on that.
Okay, that's very cool. And for the more sophisticated people, traders, etc., watching, could you show us a bit of the functionality of the rest of the website?
Yeah, absolutely. So I'll just show you the rest of the website. So this is the trading interface for all those that want to trade markets, and everything looks pretty green today, so that's nice. You can see we've got spot, we've got perpetual futures, we've got quarterly futures, we've got this repo market, which is sort of an overnight lending market, and this one is trades very high volumes, but it's all behind the scenes. Effectively, you can trade it directly, but most of the repo volume ends up being indirect, i.e., people are into that market without necessarily knowing it. It's used as a borrowing tool. And then there's this AMM product, which is probably our most interesting for crypto natives. And the AMM product is a way to earn yield on your coins. So you can take your Ethereum. Let's say someone has Ethereum, they want to earn yield on it. They think Ethereum is going to 10K, or they want to basically trade it within the 3K to 4K range. So you could put in some amount of Ethereum, and basically anytime the price of Ethereum goes down, you're buying more contracts using your ETH as collateral. So you're buying perpetual futures contracts with your Ethereum, and then as the price goes back up relative to what you bought it at, you're going to be selling out of those contracts. So it's really a way to earn from the volatility of Ethereum.
Plenty of that at the moment.
Or any coin. Yeah, absolutely. So you can also see, here's our transparency page, and you can see some of these returns. Had a lot of really high volume days. This is just the beginning of this day, and it's already looking like it's pretty high volume. And you can see here's the sort of the APRs for some of these coins, and we can see the 7-day average is where you get a really good indication. The 7-day average of ETH has been 95%. 7-day average of BCH has been 73%, and even Ripple is almost 40% there. So people are making an incredible amount of money staking their coins into some of these futures markets and earning from the volatility there.
Wow, that's super interesting. Could you just do just one more idiot-proof walkthrough on that for me again? Because that really is interesting.
Yeah, so let's say I want to stake some USDC. So I'll use some USDC, and I want to stake it into the ETH pair. So I'll take 10,000 USDC, and I think a $3,000 to $3,300 price range makes sense. So I want to buy the dip down to 3,000 and sell it out to 3,300. And so I can basically just deploy my capital here, and I'm using USDC as collateral to do this trade. You can do the same thing with ETH. You can do the same thing with any asset. In fact, you could use Flexcoin as a way to earn yield on the movements of ETH. So you can use Flexcoin as well to stake into the Ethereum market. So we can just start that up right now, and now you're market making. So it's extremely simple. And then you get this dashboard. This shows your APR, how much you've earned from Flex rebates, how much you've earned from US dollars in terms of P&L, and it's live. So it's real time. You can see all of your trades. You can redeem it. You can get more details here, and again, you can redeem it at any time. So it's a very easy to use interface. We're working on improving this interface, but it's very simple, straightforward interface.
Excellent. Okay, fantastic, Mark. So, we started off by letting the audience know that you've been in the space since 2012, so you really are one of the originals. give us your general thoughts on where the crypto market is at. Is it gone faster than you thought it would? And what do you think is coming up the next couple of years for us?
It's kind of funny because at different times in crypto, it seemed like we were sort of imminently about to take over the world. I think in the height of the 2013 bubble, Bitcoin had gone up 100x, and we all pretty much thought that okay, probably next year or two years from now, this is going to be like the new reserve currency, or this is going to just this is probably going to be $1 million. So that was wrong, but I think most of my time in the space and most of kind of the experience has been that this. I think I thought that payments would grow faster, and I've been just absolutely shocked by how true the idea has been that institutions are going to come into the space. And so we were sort of predicting, oh yeah, institutions are going to come into crypto and it's going to be huge. We were predicting that very, very early on. And I think I gave a speech in 2012 about the creation of futures, ETFs, and other forms of institutional products in Bitcoin. And this was in 2012. And so that part, I've been really pleased at how much institutions have kind of grown in to provide liquidity and trade these assets. And I think they haven't had any issues trading these assets. They haven't had any problems trading these assets. And that's been amazing to see. I think the big question is what happens next? Do we enter into a world where it's highly regulated, or does it become a world where payments are everywhere? Do smart contracts take over everything in finance? I think the rise of DeFi has been just absolutely incredible to see and participate in. I think what we're going to see there is that's just going to keep growing. That's just going to keep growing. And I think there will be a lot of people that will be expecting the growth rate to slow down because it's grown so much already. And I think they're going to be surprised. I think stablecoins are probably going to get to $1 trillion in the next few years. And that's going to really shock people. And that's going to really change the entire nature of finance in the 21st century. So I think DeFi and stablecoins are probably going to continue growing at an extremely aggressive clip. There's no way to slow that down. It's impossible. And it's an exciting space to be in because of that.
I mean, obviously there's certain headwinds at the moment around compliance. Obviously, we've got the infrastructure bill to deal with out of the US at the moment. I kind of foresee a future where we're going to have to straddle two worlds of that regulated crypto space and the unregulated. The unregulated spaces and decentralized spaces, what I'm a big fan of, obviously for these institutions to come and play, where we need those rules and regulations. To what degree do you think crypto will be this regulated space, and to what sort of action do you think we'll see in the screw you, this is how we're going to do it space moving forward?
Well, I don't think the unregulated space is actually a screw you, we're going to do it this way. I think most parts of the unregulated space are basically just people who want to build innovative products and there's no regulatory framework for us to exist in. So, I mean, CoinFLEX is not regulated. We'd be happy to be regulated. We would love to be regulated. But there is no regulatory framework anywhere on earth that exists for what we do. There's no futures regulator that will regulate a global business. There's no one world government as well. So it's a tricky position that regulators are in as well. And we dialogue with them, we sympathize with them. But we're in this position together. And I think one of the things that's been absolutely awe-inspiring is how much institutions are happy to work with and understand that complexity and that situation. And they're they're not saying, oh, we're not going to get involved, we're not going to trade, we're not going to invest until you're regulated. They're saying, we understand that this is the reality, and as an institution, we may have to do some extra due diligence, but we're definitely going to get involved. And Flex USD went from 100 to 274 million in a week. That was definitely a mixture of institutions and retail, and you can't get there without institutions. So we do see a lot of institutional participation in all of these products, Flex USD and the AMM, and it's really exciting because it just shows that there's an open-mindedness and the human spirit of adventure, innovation, and getting around challenges. Okay, this is an unregulated company. Okay, that provides some additional challenges in terms of due diligence. How do we get around those? How do we figure out, how to vet this exchange and how to make sure that they're the good guys that are insured and protected and running things in a legitimate way? And that's been what we've seen. So it's been really great.
Yeah, well put. I mean, it's just a fascinating time at the moment. I think in the main, the regulators have taken quite a measured approach. I was expecting more fireworks from them and more issues. So I'm quite happy with how things have progressed so far. I think with Gary Gensler heading up the SEC is obviously a very knowledgeable guy around blockchain. A lot of the crypto communities attacked him recently, but I think that's I actually think he's on our side. So let's see. It's fascinating times, and you guys have got a really interesting product range there. I'll be demonstrating it to our audience over the coming weeks.
Fantastic.
I've got both Flex USD and the Flex coin. So I think it's been about 2 months now. I've seen great returns on both, so I'm a fan. So look, Mark, thanks so much for your time, mate. I'd love to have you back on in the future. And you as I say, you're an OG. You've probably got a lot of interesting stories and knowledge you can impart to our audience. So would love to welcome you back in the coming weeks. I'm sure there's going to be plenty of questions from my community, so maybe let's get you back on, and I'll see how it's received from our crew. And look, thanks so much for your time, and go check out CoinFLEX, everybody. Cheers, Mark.
Thanks so much, guys. Cheers. See ya.
Thanks now.